I'm going to be talking on market structure and market areas of values. We're going to be talking on market structure and market areas of values. So now I divided market structure into three, which is very common. We have the trending market, the ranging market, and the choppy market. The trending market is a kind of market that is showing a series of higher highs and higher lows in an uptrend. Then a trending market in a downtrend is a series of lower lows and lower highs. So what do I mean by that? I'll be showing you guys now. So now I divided, not that I divided. Trending market is divided into two. We have uptrend and downtrend. This is common. Trending up and trending down. So this you are seeing on my screen is a downtrend market. Like you can see a series of lower highs. Like these highs are getting lower, 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 and lower, and then finally lower. And the lows, like the lows, the under, they're getting lower too. Lower lows, and lower highs. Like I will try and animate stuff for you. Let me know. Oh, how can I? Lower highs in a downtrend though, so it should be cautious of that. Lower highs, and then all these stuffs, they are lower lows, lower lows. So I hope you understand now. Lower highs and lower lows in a downtrend market. So the second one is an uptrend market. So I will go into this chart and look for an uptrend market for you now, so we can all understand. Mm, mm, Degrees. Okay, yeah, this is an uptrend market. Yeah, up here. I will try and highlight it for you now. Like you can see, the market is trending up. Like it is making a series of higher highs and higher lows. Like the lows are making more highs. Like I hope you understand these basic stuffs. Can you see? It's making a series of higher highs. The highs are getting higher, and the lows are getting higher too. So that's the meaning of higher highs and higher lows. Like higher HH, HH, and HL. Yes, HA and HA. Like the highs are getting higher. This low is higher than this, and is higher than this. Those are the characteristics of an uptrend. So I hope you understand that basic stuff now. So we've talked on, we're coming from market structure, which I divided to three: uptrend, trending markets, ranging, and shopping market, choppy market. So now I have talked about uptrend markets and downtrend market, under trending market. So I'll move to ranging market now. Ranging market is a kind of market that the market is trading within a known area of support and area of resistance. Resistance is a line, is a fix. It's not a fix, like it's a line or a previous record of price that have been, let us say, the highest. I'll put it that way. Like the highest price, or the most recent price that has been touched by the market. That's resistance, and the opposite to is support. So I assume you all know that from the class. So I'll just try and go through it sharp. So I was talking on ranging. So let me show you a ranging market now. A ranging market, as I said, is a market that is trading within a known area of support and area of resistance. Yes, this is a ranging market here. I'll just box it out now. Can you see? We can call this a ranging market because the support is known and the resistance too is known. Like You can actually see it here. This is support here. It is the one supporting the price, and this is the resistance here. It is the one resisting the price. Now, I will show you the last one is the choppy market. Choppy market is a market that has no specific direction, like in a long period of time. Not even long, in a short period of time. Yeah, this zone is a choppy market. Like it was not the market was not trading up, was not trading down, it was just moving moving randomly without no specific direction. So that's the chop market. So now I've highlighted the three type of market that we have: trending, choppy, and ranging, or sideways market. You can call it ranging too. So those are the market structures that we have. And trending market is divided into two: the uptrend and downtrend. The uptrend has higher highs and higher lows, and the downtrend has lower highs and lower lows. It's very simple as that. So to the main part now, to the market areas, like market areas on the chart, the second part I'm talking about. So now I divided that into let me put it this way. I divided it to five, four parts. So we have the lines, we have the channels, we have the zones and stages. Let me say lines. Line. The way I classify line, I classify it as an horizontal area of market that is showing a specific price move or specific price. Let me take this away. That is showing a specific price. How do I remove this stuff? That is showing a specific price range. Like I said, line is horizontal. Like if you are going to be using line, this is a can you see this line is used to check for the support, and the other line I will put here now will be used to check the line of resistance. I hope you understand the usefulness of line. Like I divided it to four: line, channels, stages, and what's the other one? Zones. So now this line is used to check support and resistance in an horizontal market, in a sideways market. So that is line. Then channels are used are used in an in a trendy market, yes, trendy market. So it is vertical line. That's just the difference. The line that I said earlier is normal line, like horizontal line. These channels is known as vertical line. So vertical line are normally going to be used in a trendy market that is making a series of higher highs and higher lows, or lower highs and lower lows. So now this is a channel. You can call it down channel for the downtrend, and the up channel for the uptrend. I hope you understand now. Like this upper line is the resistance. This one is support, but it is in a channel of this. This is in a line, like it is in a range, in a sideways. It's moving sideways. So that's the basic concept about lines and channels. So let me go to demand. Now, demand is bit of hard. Like I know we all did economics in secondary school, and simply I can say supply zone is a zone that has more sellers. Like when you're supplying something to someone and the person is paying you, it means you are selling it out. So that's how I see supply. And then demand is like when you're demanding stuff from people, guy, I need this, I need that, I need this, I need that. It means you are ready to pay, you're ready to buy. So that's the major difference that I'll be using for supply and demand. So supply and demand is very simple. Supply zone is a zone that has a lot of sellers, and demand zone is the zone that has a lot of buyers. Now, this market, now let's just check it. This current market that I'm on, we notice that this zone, that is this up zone, it has a lot of sellers. Like whenever the market was getting there, it was coming down again, getting there, coming down. Then later it now broke here. So you can call this zone a supply zone. I will put a text there now. Supply. Supply. Yeah, that zone is supply, and then the down zone will be demand. I hope you understand now. Like supply, like it is you are supplying stuff out. It means you are selling it out. And demand, when you are demanding stuff, it means you are buying it out. So it means when the market is getting to the zones of demand, demand is different from support, and supply is different from resistance. Resistance and support are lines, like two lines joined together to confirm a recent price action, like recent price touch. Those are lines, like line, support and resistance. Then but supply is like a zone, like this total zone, this zone of movement, like this zone. Just like this is my zone, oh, nobody should come here. Oh, this zone is not a supply zone. I hope you understand. It is different from resistance. No norms. It can break inside it too. It can break inside it, can break inside it. But now when this norms, we used to say okay, that's broken support, then support will not turn to resistance. But now on demand and supply, if it breaks supply, it doesn't mean that the supply will turn to demand. It's just like it broke inside it, then the supply will shift to the back again. Like here now, as it broke this stuff now, as the market was coming from here, it has been trying to break inside the supply zone. It has not been trying. It has been trading between supply and demand. Then I think the demand force was higher, and it is kind of evident. It is this big move. It was going up, and the resistance was just small. It went up again. Resistance was small again. So it's kind of a good sign that this thing is going to break inside the supply zone. Break inside. It's not break out from the supply zone. But it was not even trading inside the supply zone. It was just trading between supply and demand. Just like demand people that are demanding are going to be pushing the market in. So now as it broke inside, boom, supply zone change here, change to this zone now. This zone, supply zone change here. You can say supply zone change there, and then the demand zone that was coming from here, it followed it up. What to tell you? It followed it up here, here, here. So this now turn to let me yeah, supply. And these two turn to demand again. I hope you understand supply and demand zone. Like how they changed. Coming from here, demand was pushing, it pushed the market up, then shifted supply up, then demand followed it again. That's how it is. So demand and supply zone. Whenever this is the trick. Whenever the market is around the supply zone, you should be preparing to sell. If it has not touched resistance or anything, you should be prepared. Yeah, all these zones are supply zone, but they are not like we would try to we are going to classify it up here instead of bringing it down here. So now when the market was going up, could see it has not even reached the supply zone itself. Like it is already at the supply zone, but it is getting closer. It it is getting closer. Yes, it is getting closer. So that's why the market came down. Pim, 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 pim. I hope you understand what I'm trying to say. Zone, it might be affecting it will be affecting the market even from a very long distance. Unlike support and resistance. Support and resistance are just are just lines. Like it needs to touch there before we confirm it has changed. So that's it. So let me quickly erase this stuff away so we can talk on stages of market, which is going to be our last. I'm going to be keeping this tutorial very short. So just to brush your knowledge. Okay. Just to refresh your knowledge of this thing. So now, no here as we are moving here, the supply zone starts to go up like yeah, the demand is going up here, going up, following it up. Hope you understand. Let me see if I can use something like yeah. See, this is supply zone has been going up. I'm coming up. So yeah, this zone, supply zone, yeah, supply zone. Then this zone down is the demand, as you all know, demand zone. That is where there are a lot of buyers. They are ready to push the market up, 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 up. Yeah, can you see? That's how. So can you see the demand is kind of greater than the supply. So that's why the market is on an uptrend, because the demand people, the buyers, they are very much, they are pushing it up, and the suppliers, they are not even supplying more. Okay, let's just take this for example. Let us say bread. The demand of bread is 100, but the supply is just 20. What will happen to the price? This is very simple. It's an economic stuff. The price is going to go higher. Like the price of the assets, price of the bread will be going up, going up. That's why whenever the demand is greater than the supply, the market will be buying. And whenever the supply is greater than the demand, the market will be selling. So that's just the clue about it. So everything applies to trading. So as I was saying, I'm going to talk about stages. So stages are I divided stages into oh yeah. I divided stages into four. Yeah. If you're in the class, you should know about stages by now. I divided stages into four. We have the the accumulation stage. Accumulation stage is a kind of stage that is concerned about accumulating orders. Like okay, accumulation. Okay, we have, let me quickly brief it. We have accumulation phase or stage. We have the rising stage, distribution stage, and the descending stage. It's just like this first stage is just like okay, now I accumulate a lot of orders. I'm accumulating orders around these zones. I'm accumulating orders around these zones. Okay, let me delete this stuff so we can understand what I'm trying to teach us. And I hope you are enjoying the class. You can forward your questions to me on my WhatsApp. I will reply you, or any stuff that you don't understand. I will. Yeah. Now this is it. This is the accumulation stage. This is where the orders have been, they were accumulating. Like yeah, nice one. Here that I'm going to draw now is the rising stage. Oh god. No, let me use this. Let me use a trend line. Is the rising stage, like here, rising stage. Then it got to one point that the market start to, yeah, this point here, like market starts to distribute. Like okay, let me just put it that way. It starts to distribute, then it will then follow with a decline stage. Like it should come down like this. We don't know when it should come down, but the next big move should be down, 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 then to another accumulation. I hope you understand. So I'll put this thing on it now so we can see accumulation, rising, rising, and distribution, and this thing declining. Like the market is going to be declining. So I will explain in a simple way now. Just like accumulation. Okay, now I said bread. I told you I said bread. Yeah, yeah. Here is the demand zone where there are a lot of buyers. Okay, I said bread. So I carry you to a place where there are a lot of buyers. I'll be accumulating that. Okay, how many bread do you want to? You want 10. This one you want 5. This one you want 6. You want 7. So there are a lot of orders for bread. So I'm accumulating a lot of orders. Then slowly, the orders are even getting more than what I have. So it means otherwise that the demand is getting than the supply. So with that, the market will be rising up. The price will be going up. Okay, I have 100 bread and they're demanding like 200. I will definitely increase the price. That is norms. That is economics. Then it's going to a rising stage. Like it is rising a little bit, little. It started rising. Then it will get to a point that okay, I've distributed all the bread that they ordered. Though I've distributed it. That is the distribution stage. I distributed it. That stage is going to be a stage that we are going to experience a kind of kind of little decline. Like the price will be coming down because the demands are not much anymore. The suppliers are not there. Like I've sold everything. So people are people that are selling are there. You grab. So now distribution phase. Then little by little, if I've distributed everything that I have the order to finish, if I've distributed finish, it will come to a decline that there won't be any order anymore and the price will fall down. So this is stage. So that's the basic definition of all those three stuffs. So now I want you all to watch the video very well and come back with a lot of questions and suggestions. So thank you very much and have a good night rest.